The ASX 200 has shed 1.6% this week as oil surged past $111 a barrel, its highest level amid the Iran conflict. U.S. and Israeli strikes on Iran, which began February 28, have effectively closed the Strait of Hormuz, the choke point for 80% of Asia's oil and LNG flows. Iranian forces followed with missile strikes on Qatar's Ras Laffan LNG complex, the world's largest, driving European gas prices up 30% in a single session and pushing Brent crude to $119 a barrel before subsiding. Qatar Energy's CEO estimated the facility's export capacity could remain 17% lower for the next 3 to 5 years. The shockwave has spread well beyond the Gulf. Sri Lanka introduced weekly fuel quotas, the Philippines and Vietnam shifted to a 4-day working week, and Thailand ordered professionals to work from home to conserve energy. Australia, which imports roughly 80% of its liquid fuel, is now days away from what emergency officials have called a nightmare scenario, with pumps running dry in some regional areas. Treasury modeling puts Australian inflation at risk of hitting 5% if the crisis persists. The RBA responded this week with a rate hike, its first in this cycle, citing fuel-driven inflation as a key factor, with markets now pricing in no rate cuts until 2027. Banks passed the increase through immediately. CBA, ANZ, Westpac, and MAB all raised home loan rates, while CBA, Westpac, and Macquarie simultaneously lifted term deposit rates. The transmission was swift enough that NAB shares fell 1.7% on Friday, Westpac dropped 1%, and the broader ASX banking sector added to the week's losses.